Oil prices settled 1% lower on Tuesday as lingering U.S. inflation poised to keep interest rates higher for longer and likely weighed on consumer demand at the pump, while little support came from geopolitical risk. Brent crude futures settled down 12 cents, or 1%, to $83.34 a barrel. U.S. West Texas Intermediate crude WTI futures for June, which expire on Tuesday, slipped by 8 cents, or 0.7%, to $79.72. The more active July contract settled down 64 cents, at $78.66. Higher borrowing costs tie up funds in a blow to economic growth and demand for crude, as well as pressuring consumer demand at the pump. The market is very focused on gasoline demand in the U.S. because there are signs that consumers are cutting back because of inflation. Unless that turns around, the market is suggesting things could be a little bleak, said Phil Flynn, an analyst at Price Futures Group. Despite the run-up to this weekend's Memorial Day holiday, which kicks off the U.S. peak summer driving season, retail gasoline prices fell for the fourth consecutive week to $3.58 per gallon on Monday, the Energy Information Administration, EIA, said in its gasoline and diesel fuel update. However, in a bid to ensure sufficient supply flows to the Northeast, the U.S. will sell the nearly 1 million barrels of gasoline in a reserve in northeastern states, with bids due on May 28, the Department of Energy said on Tuesday. U.S. diesel prices have also slipped, EIA data show, down 5.9 cents on the week on Monday, at $3.89 per gallon. Diesel is a key refined product for both the industrial sector and transport. Investors are awaiting minutes from the Fed's last policy meeting due on Wednesday, as well as weekly U.S. oil inventory data. Industry oil data is due at 4:30 p.m. Eastern Time, 20:30 GMT, on Tuesday, followed by the EIA's report on Wednesday. There is nothing in the market right now that is pushing prices higher. If we see a little bit of a stock draw tomorrow, that may help push prices back up into the $78.50 to $80 per barrel range, said Tim Snyder, economist at Matador Economics. Meanwhile, Fed officials' comments pointed to interest rates staying higher for longer than markets previously expected. If you like Today Now channel videos, please like, subscribe, share, leave us your opinion and point of view in the comments and turn on notifications. Stay tuned for more interesting topics.